Someone read.
Martha Masule is a trader who does not keep full set of accounting records. Her financial year ends on 31st October. All her purchases and sales are made on credit terms. On 1st November 2002, Martha's debtors owed her 2850, and on 31st October 2003, they owed her 3050. During the year ended 31st October 2003, Martha received checks from debtors amounting to 39,050 and allowed them cash discounts totaling 750. Calculate Martha's sales for the year ended 31st October 2023.
So to calculate her sales, what you need to prepare?
I need to prepare
SLCA.
yeah.
Sales ledger control account.
Mm.
Which balance does an SLCA have?
It has debit balance.
So what you'll write on the debit?
Amounts received.
Opening balance of debtors is 2850. Closing balance is 3050. Are you with me?
Yeah.
Balance begin down, balance close down.
Mm.
Below that, what you will get is credit sales, and this is what you exactly have to find out. This is your balance. Are you with me?
Yeah.
Check received is how much? 39050. And cash discount, that is your discount allowed, is 750.
Mm.
So what is your total of the credit?
39,800.
How 39800? Your total of the credit is 39050 plus 750 plus 3050.
So 42,850.
Yeah, total of your credit is 42,850. From that you minus 2850. So what you will get?
40,000.
Sorry?
40,000.
Yeah, 40,000. So that is your credit sales. Okay. Please
Yeah.
do not go into the statement form because you are not sure with your work.
Mm.
Hmm?
Yeah.
Okay. So now go read the next one and tell me.
Martha allows her debtors 30 days credit. Using your answer to part A and the amount owing by debtors on 31st October 2003, calculate the actual collection period for debtors. Show your workings.
Collection period for debtors. So this is something that is related to ratios.
Yeah.
So this is the trade receivable ratio, trade receivable turnover ratio. What is the formula for it?
Mm. Amounts
It
owed.
is trade receivable over credit sales into 365. Are you with me?
Yeah.
30 days credit is allowed. That means they've already told you that the trade receivable turnover ratio is 30 days.
Mm.
They want to know the amount owing by debtors on 31st of October 2003.
So 3050.
1 minute. Calculate the actual collection period. Sorry, they want to calculate what? Actual correction period for debtors. So trade receivables, closing trade receivable was 3050.
Yeah.
Credit sales is 40,000 into
Times
365.
365.
So what is your actual collection period?
27.82.
Sorry,
27.82.
27.83. So anything above the point that comes, you will round it off to 1 day ahead. So your
So
trade
28.
collection period is 28 days. What does this mean is that you actually allow your debtors 30 days credit. What it means is that you allow your debtors 30 days credit, but they pay you how much?
They pay you under 30 days?
Hmm?
They pay you under 30 days?
Yeah, they pay you under 30 days. What does this mean?
That
You have given them 30 days time period to pay, but they pay you in 28 days.
meaning that it's okay, like,
They are good people.
yeah,
Why that your credit terms is good.
yeah,
Whether Martha would regard this ratio as satisfactory.
it's satisfactory, yeah. It's less than
Why?
30 days.
It is satisfied because it is less than 30 days.
Yeah.
Did you do this C part?
Did, but I didn't understand it.
Okay, read it.
During the year ended 31st October 2003, Martha purchases amount to 33,500, and on 31st October 2003, Martha owed her creditors 5,900. Calculate Martha's payment period for creditors.
Sorry,
Uh,
payment period for
Calculate
creditors.
Martha's payment period.
For creditors.
Yeah.
That means what are they asking you to calculate?
PLCA.
Okay, no. Payment period for creditors. That means what are they asking you to calculate? Trade payables turnover ratio. Okay. If they're asking you to calculate payment period for creditors, that means they're asking you to calculate the trade payable turnover ratio. Are you with me?
Yeah.
Is the formula for this?
Trade payables over credit purchases.
Yeah, it is trade payables.
Over credit purchases
Okay.
times 365.
Times 365. What is your trade payables? You will take
Trade
everything on the last date, okay?
yeah,
So what is your trade payables?
uh,
Come on, read, darling.
during the year ended 31st October
Try and analyze.
2003.
I've kept the question in front of you. Now you analyze and give it to me.
So her purchases amounted to
Hmm?
5,000.
Hmm?
Her purchases are 500.
Purchases, yeah. Trade payables. Trade payables, how much, dear?
Is 5,000.
900.
Yeah, yeah, 5,900.
Now calculate.
5,900. 64.28.
So it will approximately how many days?
64 days.
When our trade payable turnover ratio is 65 days, what does this mean?
So that means she's paying them very late.
Means we are paying them after 65 days. We are receiving money in
Yeah,
how many days?
in 65 days.
Hmm?
In 65 days,
Hmm? No, no, no. We are receiving money in how many days?
oh, 28 days.
Hmm?
28 days,
Okay. And we are going to give our supplier in how many days?
65 days.
That means we are receiving soon, we are paying later.
Yeah.
Okay. So come on. Read the question and answer this to me, please.
Two possible disadvantages.
Hmm.
State two possible disadvantages to Martha for not paying her creditors promptly. So,
Yeah.
like, she's not paying them, she's paying them later
Hmm.
than that's what they're supposed to pay for.
She's paying them later. So what is the disadvantage of it?
So maybe her suppliers won't like supply her anymore. They won't provide her the service.
Yeah.
Or maybe Martha's relationship with her suppliers would be like damaged and they won't like offer her their services and stuff.
Love.
She's paying them later.
Done. Now let's do this part, okay?
Yeah.
You found out your credit sales, right?
No, I just found out I didn't do anything. I just did two purchases. I just revenue, cost of sales, opening inventory, and purchases. That much I
Okay,
wrote.
so give me your credit sales.
40,000.
Okay. Give me your credit purchases.
Did purchases 33,500.
Okay. Now read this.
1st November 2002, Martha had a stock of goods which cost 4,200.
What is
For the year
this?
ended,
What is this?
opening
So
inventory.
this is opening inventory. You need to prepare a trading account. They've told you your purchases is 33,500. Sales is as calculated in A. This is what markup is 25%
35%.
on costs. Calculate by means of trading account your closing inventory. Are you with me?
Yes, miss.
Yeah? Okay.
Yeah.
Then how will you do it?
So we have to make a
Okay.
income statement.
First thing you need to understand is markup is on costs
Okay.
and margin is on.
Sale.
You can write this in your revision notes also. Markup is on costs, margin is on sales. Markup and margin allows you to calculate what?
Uh,
Gross profit. Okay. In the absence of revenue or full cost of sales, markup and margin allows you to find out your gross profit. Let's see how. You have sales,
yeah, 40,000.
40,000. Less cost of sales, you will write it. How do you get cost of sales?
Opening stock, opening inventory, purchases, minus closing inventory.
Minus closing inventory. Once you do this, okay, you will get your cost of sales and then you will get your gross profit. Are you with me?
Yeah.
You will fill this. Come on. How will you fill it?
So opening inventory is 4,200.
Purchases is
Uh, three, 33,500.
33,500.
So that's 37,700.
Hmm?
So that's 37,700.
Hmm. Minus closing inventory. I don't know. So I don't know my cost of sales. Because I don't know my cost of sales, I cannot find out my gross profit, right? Yeah.
Yeah.
Gross profit is what?
Gross profit
25%
is
on costs. That is 25 by 100 on costs. That is 1 by 4 on cost. Do you have costs?
no.
No. So that means you have to convert this from on cost to on sales.
So 1/5.
So it will become 1 over 5 on sales. So it will become 1 over 5 into how much?
40,000.
So 40,000 divided by 5. So this will become how much?
Will be
8,000.
8,000.
So what will be your cost of sales? Go reverse.
So 40,000 plus 8,000.
How much?
So 44,800.
Hmm?
40,000, 8,000.
32,000, right?
Yeah.
40,000 minus 8,000. So now come on, tell me what is your closing inventory?
So 5,700.
Yeah, the difference between them.
Yeah.
Okay. So 5,700 is your closing inventory. Are you with me?
Yes, miss.
This completes your sum of October, November 2003, paper 3, incomplete records. It's reverse calculation of your closing inventory, your missing inventory. Okay.